From the morning reading, the SPX holds support. Advancers lead. Oil bounces. 4 of 9 sectors moved higher on Thursday. XLB, XLK, and XLF were the strongest sectors, while XLV was again the weakest sector. Oil futures rose 51 cents to close at 47.31. Oil is forming a potential bull flag. Brent strengthened compared to the prior session as advancers led 1632 to 1316 on the New York Stock Exchange and led 1341 to 1176 on the NASDAQ. IWM pulled back for a second day, forming a piercing line candle and is in a bull flag price pattern. The spiders, Qs, and diamonds are at short-term support of their current 15-day sideways channel. On the S&P 500 snapshot, another down day before the Jackson Hole Friday. Equity markets around the globe posted losses, rather minor ones in the U.S. Our benchmark S&P 500 spent the day in a narrow range between its 0.16 late afternoon high to its negative 0.26% intraday low at the beginning of the final hour of trading. It trended about half the loss to close at a 0.14% loss for the day. Today's trading range was at the 9th percentile of the 164 market days so far in 2016. Volume was on the light side in advance of the final day of the Jackson Hole event, with Fed Chair Yellen in the spotlight on Friday. The yield on the 10-year note closed at 1.58%, up 2 basis points from the previous close. Funds continue to see large outflows. Domestic mutual funds have lost more than $26 billion in assets over the past 4 weeks, the largest in 3 years. Even if we include ETFs, funds are losing assets. That's one for the very few meaningful indicators that run counter to the ideal that investor sentiment is overly optimistic. Natural gas is about to enter its best time of the year. The contract has adhered to its typical seasonal pattern very well in 2016, though the gain in June was much larger than is usually seen. The seasonal pattern bottoms on the 246th calendar day of the year, which is next week. Seasonality is never a reason in and of itself for a trade or investment, but for those looking at the market, it's about to enjoy a tailwind. Copper is at the other end of the seasonal spectrum as the contract typically peaks for the year next week. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:05 a.m. Mountain Time, and I'm recording this in preparation for the market day of August 26, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. Let's go ahead and dive into the morning report. And at the time of this cut, it's mixed in action and all basically around scratch. Nothing of significance on the 4 broad market indices. Crude oil also appears to be at scratch. Euro just above scratch, bonds just below scratch, gold, the only one that's really moved at all, is up about 1/3%. And overseas action, China also at scratch, Hong Kong up about 1/3%, Japan down a little over 1%, Germany and the United Kingdom both wrapped around scratch. In terms of macroeconomic reports for today in the United States, of note, you had the preliminary GDP, you have Fed Chair Yellen speaking, and the University of Michigan consumer sentiment. In terms of current volatility conditions, short-term VIX been moving up a little bit of late, 12.77, skew somewhat elevated at a 131. IV percentile still all exceptionally low, though up off their bottoms. S&P at 11, the Russell at a 15, the NASDAQ and the Dow at an 11. No standard deviation moves were put in yesterday on any of the 4 broad market U.S. indices. In terms of the charts, let's go ahead and go there. And On our S&P futures chart, you see the action leading into today's Fed Chair Yellen presentation from Jackson Hole. Has been very much sideways. Yesterday's action ended up being a doji. The action overnight into this morning thus far, also very, very small range. Obviously, everybody is waiting for some indication as to the condition of the market from the perspective of the Fed, and then also what they might hint about future interest rate increases. So this is really doesn't give us much new information from yesterday. We're going to move through this fairly quick, given that none of these charts really have done anything of note since our last session. NASDAQ perhaps the weakest of the four, but you know, still very, very small action. Nothing really of note on any of these charts. Crude oil may be getting ready to form a potential bull flag breakout. It's on the verge. Gold also in the overnight session did have a bull flag. So I say that, but do note that this has been, of late, you know, lower highs, lower lows. So this could be, frankly, just setting up for a bearer flag. And it's also kind of down here into the cloud. It's just barely peeking its head out of the cloud at this point. So kind of a neutral. Also in the larger pattern here, you could draw another bit of a triangle here, and not quite at the apex. So I wouldn't get too aggressive initiating new positions with gold at this point. I still expect that at some point it'll probably move to the long side, but it is a very, very trying and steady, patient chart developer in 2016. And let's take a look at bonds. Bonds certainly not giving us any indication, and they're certainly probably waiting for Yellen to speak. They're a very, very neutral stance at this point. And then volatility has been somewhat elevated in recent sessions, up off the very low area that we had been in the 11 handle a few sessions ago, but still nothing to get terribly excited about. We've not had a volatility spike or anything like that. We did pop, you know, a couple sessions ago, and that did set off a couple volatility warnings, but those have ebbed off already. And, you know, this is pretty low-grade action here. So, frankly, in all these charts, pretty low-grade action. Nothing to get terribly excited about. Let's go ahead and go to the daily report. Still looking for the market to have an overall bullish bias, though obviously in something of a retracement. Today's speech from Yellen could obviously influence the market and give it new energy and momentum to either direction. But coming into that, the expectation is bull flags. You do have, from the three market timing signals, some mixed signals. The first one from IBD, that mechanical signal right now, uptrend under pressure, so very cautionary. GMI index still bullish with a buy signal that's been in place since 7-1, but note that the more sensitive GMI2 down now to a 4 out of 8. On the stock charts decision point scoreboard, our third mechanical signal, you notice the mixed signals on the short term and on the long term. No change on that, but that certainly is leading us to have a very kind of mixed expectation in terms of the current market timing signals. Expect a lot of chop, really, is what that's telling you. Oh, I forgot to change this again. This should be 50% on the position sizing opinion based on portfolio investor. The volatility system, that model is now saying 75 to 100%. Here's a significant development in our intermediate term market posture. The S&P has now turned to weak bear, joining the Dow, which had turned weak bear the prior session. NASDAQ and Russell are still holding on to their severely strong bulls, but they have been deteriorating and, you know, could easily follow the first two. Now, the most important signal is from the S&P, so the fact that this has gone to a weak bear is significant. Now understand this is up against a bullish sentiment line. Expectations are at this point that weak bears would be small retracements, not terribly offensive to the bulls, and probably more likely than not to be an opportunity to enter new positions once that bottom is found and we start to get bull flag breakouts. So be watching your watch list and developing, where you might want to take opportunities should this situation stabilize. But this is your first warning sign starting to come in from this particular indicator that things are deteriorating. Overall strength of the trend is still strong. Hedge warning status remains the same as the prior session. Level 1, a caution light. Our overall, well, let's see, I didn't change this, but our conditions should be borderline acceptable to not acceptable to initiate new positions for novice traders on put selling and cover calls, given that we are level 1. So I changed that yesterday. I shouldn't change these two as well. But you've got to be perhaps looking for those opportunities, but wait until you get firing signals, as in bull flag breakouts or diagonal breakouts with the current level of deterioration. On the specific warning areas, we actually had some of these come off. 2 of these ebbed off yesterday. Also, NASDAQ's distribution day count fell below 5. So we actually had 3 of these warnings kind of disappear yesterday. So that is of some note. Yesterday, of course, was a relatively quiet day. I suspect that once we get the Yellen speech this afternoon, that things might heat up. In terms of trend base, you had the one new warning here with the market posture on the intermediate term line of the SPX going to weak bear. Nothing really else of note. The key intermarket risk aversion indicators are still 3 is risk off, 2 is risk on, and those are both admittedly pretty weak. And frankly, many of these signals are pretty weak in that they're very close, not a lot of slope and separation. They could easily all go the other direction with price action of one day. Sentiment, intermediate term sentiment on stocks, a little bit elevated, and you see the fear and greed index at 66, also a little bit elevated. So nothing particularly exciting there. In terms of sector specific, you see there's been a lot of deterioration, and really only 3 sectors are now holding up as positive across all 3 time frames. So those would be energy, financials, and technology. And you see across the other sectors how they have not only deteriorated to neutral, but in a number of cases to actually bearish. Yesterday's action was positive for a few sectors, really only materials and telecom, maybe financials you could make a case for. And the positive side, note that utilities held up yesterday, though staples did give up a little bit. So it wasn't just a clear, obvious risk on or risk off kind of day. We definitely had something of a mixed bag. Okay, so enough for today. Let's go ahead and get this to publish. If you need more time to read the disclaimers, just hit the pause button. Also note the hyperlink down here at the bottom for the full set of disclosures. As always, we'll see you back here for the next trading session from Falcon Global. And in the meantime, manage that risk. Everything else should fall into place over time. And good trading.